All right. Welcome back to Bitcoin News Live. Got a big show ahead of us today. Got two great guests who know a lot about what is going on in these markets around the world, AI, Bitcoin. The trade that's defined the year is starting to falter, and maybe it's Bitcoin's time to shine. We will dive right in. Let's get started. Bitcoin has been boring for 6 months now. At $64,000, it is half off its high and at the same price it was back in February. But look at what's happening in global markets all around it. The Nasdaq is down 10% from its high, officially in a correction. The Kospi, Korea's stock index, is officially in a bear market, down more than 30% since June. And former AI darling Oracle is in a downright depression, where it's fallen 60% in less than a year. There is now serious talk underneath the surface that the AI buildout is the largest misallocation of capital in modern history, with roughly $2 trillion of circular deals resting on promises nobody has the money to pay for. On top of all that, in 3 hours, we get a rate decision from the Fed on what is the most uncertain Fed day in years. Bitcoin has shrugged all of it off so far, building an ever stronger base in the 60,000s amid the AI bubble unwind. Either that's the decoupling everyone has been waiting for 15 years, or Bitcoin simply hasn't caught up yet, which would also align with Bitcoin putting in a market cycle bottom later this year, right as the 4-year cycle predicts. My two guests today are market analysts with a sharp eye to show us where we are going. André Dragosch and Durden BTC, welcome to the show. Gentlemen, how are we doing?
Thank you so much, Rob. Thanks for the invitation. Happy to be here.
Nice. Andre, yes, good to see you again. Good to have you back on the channel. And somebody new to the show, we've got Durden BTC, somebody with wonderful charts who I've seen for about a year now. I'm very excited to have you on. Thanks for joining.
Awesome. Yeah, thanks for having me, Rob. Andre, pleasure to be here. And it's an interesting day, so I'm excited to get into some charts and what's going on.
Yeah, so much to unpack here. I mean, 2026 has been the year of the AI trade, right? And another one of those times where you look back and say, it was too good to be true. They always say this time is different. It's going to go up forever. And if you look at something like the Kospi, the Korean stock index, or the SOX semiconductor ETF, these things literally did go straight up. I mean, let's pull it up on screen here. And now we're seeing the correction. Right. I mean, this thing, this is the Kospi, this is the Korean stock index, right? It peaked out around 9,400 and now we're 40% off that, 5,600. I mean, it goes up like an elevator and comes straight back down. Not only that, we also have SOX over here, the semiconductor ETF. And when you look at this bad boy, I mean, when you see a stock chart, just pull a move like that, it's really hard to think that that's sustainable for a long time, right? It needs to come back probably and test at least down here back in the 300s before maybe going back up. You know, I don't think the AI trade is over, but this thing has been running hot for so long that it's time probably for it to take a breather. What does that mean for the wider markets and Bitcoin in general? I've got these two gentlemen here today to help unpack it all. And I'd like to start off today's conversation with a thread that Andre actually put together and released yesterday, not just a regular thread, but a mega thread breaking down the AI trade and everything that has happened over the last year or two. Before we go down chart by chart, give us your overall thesis here and what are your thoughts on the current state of the market, Andre?
So overall, thanks again for the invitation and really cool to do this with Tyler as well. So I think the overall thesis is, I mean, AI is transformational technology, right? There's no doubt about it. But usually these types of technologies, they take a lot of time to diffuse into the whole society, whole economy, right? And there's some kind of mismatch in terms of expectations when this is going to happen, right? Well, when we have this kind of mass adoption, right? And also agentic AI and all of these other topics, right? And the mismatch actually creates this kind of risk for the market right now, right? There's been a huge run up in semiconductor stocks, DRAM, ETFs, and so on, Kospi, Taiwanese markets, everything that's essentially related to the AI trade semiconductor cycle essentially had a huge run, especially this year. And I think the market has gotten ahead of itself, right? And the key risk is, of course, capital misallocation, right? Because let's say these kind of huge demand projections with respect to agentic AI and so on, they won't materialize, right? But they've built all these data centers, right? They've invested all of this capex, which to some extent was financed by debt, right? Issuing debt. And I think that's where the risk is, especially in terms of depreciation of chips. We know that these depreciation cycles are much shorter than like the usual kind of infrastructure or real estate depreciation, right? And so I think that's the big risk for the market right now. And of course, there are like huge implications for Bitcoin, right? The moment we have like what I think could turn out to be a multi-year kind of digestion / correction, right, in the whole space. I think there's lots of capital looking for a new home, right? So you have this kind of rotation narrative, especially after like the precious metal complex has broken down as well, right? We saw these big corrections in both gold and silver. I think silver is down more than 50% as well since its peak, right? So these investments have been burned. Now AI investors or related investors are being burned, right? And so I think that capital is looking for a new home. And usually these types of parabolic charts that you've shown, like the Cosby or SOX or anything, they usually take a lot of time to correct and digest, right, before re-entering a new bull market. And unless the Fed will cut rates today and ease monetary policy aggressively, I don't think we'll see like a V-shaped recovery in these stocks, right? And so I think there's like lots of scope for more correction, and therefore at some point also the scope for easing monetary policy. Probably not today. I think there's rather higher chance for the Fed to hike rates, right, than cut rates today. But I think down the road, of course, as like this correction intensifies, right, and financial pain increases, credit risk rise, even systemic risks emerge, maybe because of Oracle or any kind of hyperscaler blow up or anything, right? I think at that point in time, the Fed will likely intervene, right? And then you have a new catalyst, probably the catalyst that we've been waiting for Bitcoin, right?
Well, there you have it. All right, Durden, what's your take on the markets right now? There's a Fed decision coming up later today. Yep. Bitcoin has been languishing. Give us your take.
Well, I don't want to say it's over, but because for Bitcoin, it's been over for quite a while. I do definitely agree with Andre just for the, what's on the table today for the FOMC. I mean, Kevin Warsh is obviously the new Fed chair, so it's going to be really interesting to me anyway, more so what he says rather than the actual rate decision. I think it's almost a coin flip at the moment. It's 66% that they're going to keep rates the way they are, and about 33% that they're actually going to hike. I think the more interesting thing to look at is the end of the year. So if you go out to, the 9th of December, that meeting for the FedWatch odds, they are at 400 to 425 bips for the end of the year, meaning 2 hikes by the end of the year is what's currently priced in. So I think it'll be important to see what he actually says after the meeting, whether his tone is more hawkish or dovish. But I'd have to agree that stocks definitely don't look good. I mean, my systems are leaning risk off at the moment, although the signal hasn't fired just yet. But I think it's more likely to, for us to have some short-term pain. Maybe the Fed's okay with us going into a correction and then giving it some backdrop to later ease going into next year. My real issue and something that's been scratching the back of my mind is if stocks, let's just say game theory, they've topped out, how does Bitcoin outperform as a risk asset if stocks are in a downtrend, right? That's been really the question in my head, because all the on-chain indicators are showing, well, at least pretty much most of them, that we are at cycle low type levels. It doesn't mean that it can't get worse, right? Everyone shows these charts, myself included, but there's only been 4 cycles. So an N of 4 statistically isn't a great number, but given the historical data that we do have, Bitcoin does look cheap in comparison, but you can't just take a look at a single asset. You have to look at what's going on in the totality of risk assets, and that includes stocks and everything else. I think what's more important for me anyway that I'm looking at is bonds. So I don't want to get super boring. I know when people hear bonds, they think, my eyes are going to glaze over. If, the 10-year and the 30-year yield are above, the 30-year is above 5% right now, which the last time this happened was October 2023. Stocks took a 10% hit. And before then, the last time 30-year, government bond yields were above 5% was 2007, before the, global financial crisis and all that stuff. So it's an interesting spot. I would definitely say, if you're sitting 100% cash, definitely don't buy stocks probably yet. Wait for something. But it's going to be a very, very critical, I think, 2-3 weeks to really see how the Fed plays it today and what Kevin Warsh's comments are in terms of U.S. fiscal policy and monetary policy. So we'll find out in a couple of hours.
It's so funny because it's been a year or plus of the confirmation of Walsh, picking him, and then Trump saying that he wanted to fire Powell early, that Powell's too late Powell, this guy's not cutting rates fast enough. And now we've got Walsh in there, and they don't do anything the first meeting. And now this is the most undecided by the market as to what is going to happen. He ended forward guidance. He doesn't want to give the game away before they go up and make a decision anymore. And the old Federal Reserve was very much just one man led, right? That all the decision making power really was on the shoulders of the chair, and the rest of the committee really backed him up. Now it seems as if there could be a lot more indecision and just different sides being taken within the Federal Reserve. So nobody really knows whether they're going to keep it the same or hike. Very few people expect a cut, even though that's what Trump has been asking for, begging for over a year plus now. But it's also an opportunity for Warsh to come in there and sort of get some street cred, right? If he does go in there and hike today, he looks like he's a tough guy on inflation. He doesn't care what the market thinks, and he's not beholden to the stock markets going up to new all-time highs every single week in order for him to be looked upon kindly. So we'll see. There's just so much up in the air right now, and I think we've got to break it all down, and let's do that visually. Durden, you got some charts you want to bring up?
Sure. Yeah, I can start. I'll focus on Bitcoin. We can do some stocks at a later moment, but I did want to kind of just go back to what I said earlier, where a lot of the on-chain stuff is obviously signaling that we're near a cycle low. I think what a lot of people miss generally is that, for example, what you're looking at here is a composite. So this has realized price, STH, cost basis, and a bunch of other things feeding into it. This model just basically aggregates it and gives you a signal whether things are sort of overvalued or undervalued. But the most important thing to me is, if you look at even the last cycle bottom, it started anyway, this signal in June 2022, and the actual low really didn't happen till almost a year later, like the actual end of this capitulation. So it's just something to, recognize that there's no one signal. I always say that kind of chasing bottoms or tops is a loser's game. I don't want to sound mean, but everyone's obsessed with bottom ticking the market or selling the absolute high. And that's not really how you should be thinking about risk management. It's, can I buy within 10 or 15% of the bottom and sell within 10 or 15% of the top? If you can do that over a decade or 2 decades, you'll be extremely wealthy and in the money. That's all you really have to do. I posted this a couple of days ago, but this is one that kind of reverts the signal a little bit, where, we haven't hit the LTH, STH, and this is Axel Adler's charts. He does a bunch of amazing on-chain stuff, but it just goes to show that there's no one, key out there that'll sort of unlock every right answer for you. It's a confluence of where it is. I think the issue for me and where I have this itch again in the back of my mind is, if stocks aren't looking great, and let's just say again that we're going to do a 3, 6, let's say 12-month downtrend, chop, correction, whatever you want to call it, all risk assets to a certain degree are correlated. How does BTC and everything else in the crypto space actually outperform if tech, SPY, everything else is chopping or in a downtrend, it's a hard question to answer. So, it's a pivotal point in the year, I think. But yeah, Rob, go ahead.
Well, let's get Andre's take on that, because I think he sees that this is an opportunity for Bitcoin, that if the stocks do start cracking, maybe it's Bitcoin's time to shine. What do you think, Andre?
So, I mean, what we've seen so far since the SOX peaked, right, on the 22nd of June, is like the SOX is down, I think, 24% today, right, peak to trough right now. And Bitcoin's actually up, right, since the SOX peaked. So it might tell you that capital is actually already rotating into Bitcoin, right? But I think so far what's definitely remarkable is that Bitcoin has been very much resilient despite this kind of drawdown in the whole AI trade, right? And so, and the reason why I think that is actually maybe a couple of things. So I generally believe in this kind of thesis that Bitcoin has been the canary in the coal mine and the macro coal mine that has already been signaling a tightening financial conditions in advance, right? Essentially since October, since Bitcoin has been in the bear market, it's been signaling this kind of tightening in financial conditions, which was, by the way, also consistent with the weakness you saw in software stocks, especially the hyperscalers. They've been in the bear market since, drumroll, October, right? So it's very much consistent with this kind of AI unwind and tightening financial conditions. And you can see it in things like CDS, right? Credit default swaps among the hyperscalers, private credit, leveraged loans, everything that's leveraged to this AI infrastructure build out has been in a downturn essentially since then. So that it has been quite consistent. The good news is because Bitcoin has anticipated this tightening financial conditions in advance, has done a lot of the downside already, right? And we actually said in February that this kind of macro discount of Bitcoin with respect to macro expectations, like very forward-looking indicators, was the highest since COVID, right? That means a lot of bad news was already priced in a lot of bad macro news. And now all of these very forward-looking indicators, like Philly Fed expectations and so on, Centix expectations, they're actually rolling over, right? For obvious reasons, because the AI trade's now showing cracks and so on. But like all of these investor surveys are rolling over, they're very forward-looking, and they're catching up to what Bitcoin actually did, right, already. And so I think a lot of bad news is priced in. And I totally agree with what Tyler said. I mean, if you look at all of these like on-chain indicators, like MVRV, if you look at the percentile, it's like bottom 10%, bottom decile, right? So I think the only thing that you could caveat is the duration has not been as long as in previous cycles yet, right? And I've prepared an interesting chart. Maybe I can show my screen really quick.
Yeah.
So you've probably seen that chart, right? Percentage of Bitcoin supply and profit, right? It's already comparable to previous cycle bottoms, right? So in terms of valuations, it's already quite attractive, just like what Tyler has just shown, right?
Mm-hmm.
And you can see this across multiple metrics, multiple different metrics, so different lenses actually tell you almost the same story, right? Valuations are low and attractive. But if you look at the time spent below one standard deviation of this percentage supply and profit metric, I mean, we've just touched 100 days, right? 100 days, so to speak, where we're in like extreme pain, right? In terms of like losses and so on. And I think the 2018 kind of crash, the bear market, we spent slightly more than 100 days, but during like FTX, we spent almost like 150 days in this kind of pain zone, right? So I think in terms of duration, there's still more scope for like more pain or more downside, right? More consolidation. But I mean, I agree with Taylor. Like, if you start accumulating now, I think it's probably not a bad idea, right? Because the bottom is not an exact point in time, right? It's rather a kind of process, right? And if you do accumulate in this kind of bottom 10 percentile, you will definitely do well, in my view.
Yeah, it's a range.
it's a range. Yeah.
I could go if you want, like really quick.
Sure.
I can sort of shotgun some charts. I don't think I've ever said that before. Just before I get into this, because there's a bunch of these that are all basically showing sort of the same thing. I just wanted to ask you all, take a moment to go back in time with me to, like, I don't know, September 2025. Everyone is waiting for the ISM to go above 50. Everyone's saying global liquidity is going to go higher. I mean, there were price targets of 250K, 400K. Some people thought we were going to 1 million. It's just, I guess my point is that price is king at the end of the day, no matter what you're looking at. And price can also shift sentiment extremely quickly. Like if we go up to 70, 75, 80K in a matter of a week or two, Bitcoin bull market is back on, in theory, right? So it's just, it's market psychology at its base level. And it's just really kind of almost endearing to watch over the course of a year, especially with a pivotal one such as this. I think the more interesting thing to me, and I'll show some of these charts. We can go through them really quick. Unrealized profit. This one is probably the craziest one, just because Bitcoin has historically, as you can see, has not fired green, which is the super capitulation band here, much if at all in the past cycles, where we've actually been in this since February, right? I think all the bottom stuff is cool. Everything's showing that we're near a cycle bottom, right? You have the MVRV Nupal composite here, again, flashing green recently. I think what was more interesting to me when I was looking through all this stuff this morning is that why a lot of people got kind of shocked by this cycle was because most of the historical top signals weren't anywhere close to flashing this cycle. It was a really muted, sort of slow, choppy grind up to 126K before the end came, and everyone was still expecting, none of my top indicators hit. We're going to 175K, and at that point, it made sense because historically that's what happened. But again, you have an N of 3, meaning 3 cycles, and even for, this is one of my models, it's the harmonic oscillator, and you can see very clearly here on the bottom, we didn't even touch the red band. We got close, but previous cycles, we stayed up here for months at a time. So this cycle was just very different. I think also something we really haven't mentioned yet, this is global liquidity, right? This was everyone's favorite chart probably a year ago.
The most hated chart right now.
Exactly. But it is signaling currently kind of like what we saw in, 2015, late 2015, that compared to where, M2 in general is across all the major countries, where oversold in terms of the band, I think that the thing that really a lot of people probably don't think as much about, but I think impacted this cycle, was the fact that ETFs came out. But forget about ETFs for a minute. It's all the derivatives and options on top of the ETFs, right? So you no longer have to hold or custody Bitcoin yourself, right? You can just buy IBIT and let them custody it for you. So a lot of the self-custody stuff is kind of in a way gone. So while it opened institutional doors and there are inflows and outflows, now you can, in a sense, with derivatives, right, options on IBIT and ETH and whatever other format you want, you can leverage Bitcoin to, insane multiples without ever moving the actual coins on chain. And that dampens the volatility, right? I don't have the chart up for it, but I think Bitcoin volatility is at one of its lowest in the entire cycle history, right? I think it's down to something like 60 vol, where historically it's a 80 to 120 vol asset. So, you have to just kind of adjust with the market. It's a different game. This isn't 2018 anymore. And I think people expecting these kind of, insane run-ups are, probably going to be, unfortunately, not as happy. So I'll just leave it there and get your thoughts.
Yeah, well, Andre, I mean, of course, you work at Bitwise. You guys have a large Bitcoin ETF. What has been the institutional interest in the Bitcoin ETF over the last, say, 6 months or so, since we've been cut in half in price? And ETF holders have started to dump as of late. Correct. They've been pretty diamond-handed since the founding of them in early 2024. But as of the last couple months, we've seen hundreds of millions, if not billions of dollars worth of the Bitcoin ETFs be unloaded. So what is the general sentiment within the institutional Bitcoin ETF space right now?
So it's essentially twofold. Like institutions, they're relatively bullish despite the bear market because they think about it strategically. So they're actually cheering on like lower prices because if you start implementing a strategic allocation, right, in your kind of multi-asset portfolio of like 1% for like a very long time horizon, like at least 5+ years, right, you don't really care about like short-term volatility that much, and even a bear market in Bitcoin, right? And so institutions are pretty much bullish, and we've seen a lot of inflows from institutions and even inquiries despite the bear market. But I think retail is very pro-cyclical. Right? And to be honest, you do have a lot of retail interest in the ETF flows, right? A lot. And so I mean that's a famous saying, like retail buys most at the top and least at the bottom. I mean, that's also true if you look at the flows. Like we've seen a lot of outflows due to the bear market, right? That's true. But in terms of price drop, I mean, we had a 50% drawdown, right, in Bitcoin price, but the cumulative flows had a less than 20% drawdown. So they were relatively resilient because many institutions, they didn't sell, right? And so it was more like fast money, more like hedge funds that did sell, but many strategic allocators, they didn't sell, they bought even more, right? And at the same time, right now we have actually, during this kind of AI trade unwind more recently, we actually had 2 consecutive weeks of inflows. Not much, right? But still was positive, right? Which was kind of surprising. And so, yeah, I think Bitcoin right now is relatively resilient. I do agree with Tyler that like sentiment can change pretty quickly depending on the price, because it can become somewhat self-reinforcing if you hit certain, or if you surpass certain price levels. For instance, short-term holder cost basis, right, or true market mean. What I actually mean by that, so if you look at these 2 key price levels, let me share my screen really quick. So if you look at these 2 key pricing levels to the upside, so short-term holder cost basis is essentially the average acquisition costs of all kinds of short-term holders, those investors that have held Bitcoin on chain for less than 155 days, right? And they tend to be less sophisticated, like have lower conviction and so on, right? It's more like retail fast money. And so at the moment you hit these kind of, and you surpass these kind of price levels, now 69K short-term holder cost basis. The moment we move above that, suddenly the average short-term holder, right, let's say retail investor, is suddenly in profit, right? Has unrealized profits, paper gains essentially. And the psychology suddenly switches from like, sell the rip to buy the dip, right? Because they're not inclined to sell anymore, or are less inclined to sell. So it becomes this kind of self-reinforcing feedback loop of higher prices, less profit taking, right, and so on. Because what you've been seeing with these attempts to the short-term holder cost basis, especially like in May, what happened was like many of these short-term holders, they actually broke even, and then they started exiting their position again, right? So just break even out, right? And that's why we retrace back to the lows. And now we do the second attempt essentially, right? And the moment we break above it, and we've actually seen less and less capital outflows, which is also a positive sign, despite the fact that we did new lows in the price of Bitcoin, we had less capital exodus in terms of realized cap changes. You can actually see it on chain. And also in terms of outflows from ETFs, right? So I'm actually quite optimistic, especially with respect to the whole institutional demand complex. So if you consider both global Bitcoin ETPs and treasury company flows, right? We actually hit a 4-year low in June, right? The moment that strategy started capitulating, right? When strategy said, "Oh, we'll sell 3,000 odd Bitcoins," we hit this kind of 4-year low. We had massive outflows from ETPs. And so now we're actually re-accelerating. I can show the chart. This is the key chart. So institutional demand growth, so Bitcoin ETPs and treasury companies, tends to be one of the key drivers of Bitcoin price, right? It's rather a coincident indicator, right? It's not like a forward-looking indicator. But what you can see here is we hit this 4-year low, right, more recently. And now we're re-accelerating from this kind of FTX depressed level. And it might be very asymmetric because you already had these outflows. You had some kind of seller exhaustion, right, from ETP investors. At the same time, strategy is stabilizing, right? It looks like he's getting his digital credit engine back, right? Strategy is pulling back to par, right, and so on.
We'll see. We'll see.
We'll see. But looks, I mean, the direction, the trend of the trend's your friend, right? The direction is now has reversed somewhat, right? Looks like stabilizing, and so I think it's very asymmetric for me. It's quite likely that institutional demand growth will re-accelerate from here, while the downside is actually quite limited at these kind of FTX style levels, right?
Yeah, well, let's get into the strategy and institutional demand side of all this. Durden, do you have any takes on it?
I just had a quick take on what Andre just shared, because I think it's really poignant, is the fact that, and this is just complete conjecture, but I have quote unquote like normie friends that are not in crypto Twitter and just, you know, investing and stuff like that. And they're all waiting for 54K for whatever reason. I guess that's realized price right now. That's that chart. So the only reason I bring that up is because the market's never going to do what you want it to do. It's always going to surprise you. And I think Bitcoin specifically is especially good at that. So if the majority of, you know, retail, let's say, quote unquote, again, this is just conjecture, is waiting for some price, 45, 55, whatever K level you want to market at, it's likely that we never touch it. So, because you're going to get front run by, you know, bigger players, smarter people in the space. So I just, you know, regardless of what happens with stocks and everything else, I think it's going to be a really, really interesting rest of the year. And it's for strategy specifically, we're going to see what happens. Let's talk about it. Y'all are probably more in tune with what Sailor's doing and everything like that. So I'll hand it back off to you.
Now, I just prepared this chart as like what you've mentioned, realized price. I think.
Can you zoom in a little bit on that?
Yes, of course. So we've just touched this kind of prominent 200-week moving average, which Adam Back is reposting all the time, right? But realized price is actually a bit lower. It's close to 50K, right? And I agree. Like, I think many people have been waiting for this kind of realized price tag, and especially long-term holder realized price, which is even lower. I think slightly below 50K. And in fact, we did hit like both realized price, which is the average acquisition cost, including the Satoshi wallets, right, of all on-chain investors, and long-term holder realized price of these like long-term investors that have held Bitcoin for more than 155 days, right, in previous cycle bottoms, right? So, and actually, I think this kind of tail risk from the stock market crash, right, that we're seeing right now, I think it actually implies that Bitcoin could have a second leg down, right, or final leg down, right? But at the same time, you have these tailwinds that are building up, right? Macro is actually quite bearish, right? If you look at the Strait of Hormuz situation, oil price spike, which is affecting like treasury yields and so on. You've just mentioned like the 5% mark, right? On the 30-year, 10-year yields is also very much correlated with the oil price, right? And so that's the tail risk. Fed monetary policy, of course, you name it, right? So macro is actually deteriorating / bearish, while all of this kind of on-chain stuff is actually quite bullish, right? If you think about it, like institutional demand growth re-accelerating, long-term holder supplies at a new all-time high, right? The valuations look attractive, like most of them are like in the bottom 10% and so on. So I think you have this kind of dichotomy between bearish, like macro and bullish on chain, and that's probably the reason why Bitcoin is currently still consolidating, range bound. But I think the moment you see like macro risk resolving because like the Fed is easing monetary policy again, I think we have like a new bull run.
Yeah, and my X timeline's too bullish at the moment. I don't like it. It's something's off, something's fishy. Like one final flush, let everyone get out the door, no more bulls left. That's when, it really starts to launch.
And it's interesting because we are in a midterm year. Midterm years are historically horrible for stocks and Bitcoin. And it's funny how the 4-year cycle has lined up with these midterm elections here in America. So in the fall of midterm years, that's when you usually see a 10 to 20% stock correction. And that lines up sort of perfectly with the 4-year cycle. 1 year post the all-time high would be early October of this year. And could what we're seeing right now set us up for all of that to happen? Right? It could be very interesting. We see, the stock market really doesn't go down too much in the summer. Most of the bankers are away from their terminals. They come back in September. They look at what's happened in the last couple of weeks, and then things start to go crazy in the fall. And Bitcoin seems to line up with that. And that would be the final flush, right? And it would line up perfectly with the 4-year cycle. What are your guys' takes on the 4-year cycle? Is it still intact? And do you believe in it now more than ever after seeing how 2026 has played out? Durden, take it away.
Yeah, I hate doing stuff just based on time, like on some numerical value of X days or Y months or whatever, but there is some mathematical basis to it, right? Just because of the halving cycle. So there is some influence regardless of what camp, quote unquote, you're in. I think, people haven't talked about the ISM for months now, so we can bring that up, but that's also cyclical, right? And this isn't like a new thing. Even stocks in general are fairly cyclical and aligned, even going back to, the 1900s. If you want to really zoom out, like even outside of Bitcoin, you can say generations are cyclical, right? If you read any fourth turning style stuff, I have the book on my desk behind me, but every 20 years, there's sort of a birth, a peak, and a decline, and then some catastrophe, right? So it's just, there's cyclicality to everything. But in terms of Bitcoin, again, I try to look at things in a statistical manner, and having 3 cycles in the books just isn't enough for me to really put myself in one camp or the other, which is why most of my systems are built around trend systems, trend following. And Bitcoin is historically really good at trending. And so I apply that to, my math-based approach, but we'll see. Maybe one more cycle, we'll have an N of 5, and then we can finally put it to rest, this argument about, who's right and who's wrong about it.
Yeah, I actually agree. I think, our thesis before the bear market happened in 2025 was like the halving cycle is dead, right? That was wrong at that time, but our rationale behind it was, if you look at institutional demand growth alone via ETPs, ETFs, treasury companies, etc., and compared to the supply deficit induced by the halving, which is now 164,000 Bitcoins per year, right? The halving supply shock, essentially. Institutional demand growth, especially in 2025, has been like multiple times larger than this kind of supply deficit, right? So just from a pure quantitative perspective, demand has been much, much more important, right, than this kind of supply shock. And so, but it turned out to be maybe a self-fulfilling kind of prophecy. You saw like big profit takings by long-term holders, right? Revived supply, Satoshi era supply coming to the market, and so on. But it also made sense from a macro point of view. And by the way, talking about macro, there's a funny coincidence not only between like halving events and US presidential election cycles, right? But also the macro cycle, right? Because all of the US, the business cycle troughs in the US ISM manufacturing index lined up with each of those halving years, right? Consider 2012, right, which was a halving year, we troughed in the ISM manufacturing index. 2016, we troughed in the ISM manufacturing index because of the Chinese slowdown, the manufacturing slowdown. 2020 because of COVID, right? 2024 because of tariffs and all that stuff, and tightening monetary policy, right? And so I think it's rather the macro / liquidity cycle that's now in the driver's seat, and it's becoming more important over time. Maybe it has been the halving cycle in the past cycles, at least up until cycle 3, up until 2020. But I think especially after COVID, I think the halving supply shock passed the baton to institutional demand growth, liquidity, and macro essentially. And since then, you can also see that most of the variations in the price of Bitcoin can be explained statistically via changes in macro factors like global growth expectations, like these boring things, monetary policy, US dollar, and so on, right? And so, yeah, and so I think it was probably some kind of self-fulfilling prophecy that we actually followed this kind of halving pattern, post-halving performance pattern, right? But I think it also lines up with the macro, right? Because we've seen this tightening financial conditions, we've seen this underperformance in the hyperscalers and so on, credit risk, credit complex. And I think what's still puzzling is, and you've shown that chart, right? Global money supply continues to grind higher, while Bitcoin has been in this kind of bear market since October. One of the key theses, of course, like AI trade, precious metals took the oxygen out of the room, right? We had this kind of divergence. But it's very likely that Bitcoin once again is this canary in the coal mine, anticipating this kind of downturn, and that we might see like sharp reversal in gold money supply soon. Right?
Durden, I see you with this green chart. There we go.
Oh, you can see the preview?
Yeah,
let's I'll pull it up. So this is like going back to really boring stuff. And this is why bankers make stuff really boring so that you don't pay attention, right? Because no one wants to talk about bond yields. But this is the 30 year, on top and the 10-year on the bottom. And you can see last time we hit these numbers, 5% for the 30 was October 2023. And for stocks, if I go to this really quick, you can see there was not a huge drawdown, but 10%. So a decent haircut, right? When this did happen. I think more importantly, though, is, like I said, you zoom out. The last time it was at this level, even before that, was 2007. And then if we go one further, and I think a lot of people sort of forget this, is that 1980s, because I love my stock market history, and a lot of people, especially younger folks, probably just don't know this. In 1980, whatever this was, the actual rate was 15%, right? So if you wanted to get a mortgage on your house in America anyway, it was insane for the interest. So just because it hasn't happened in a while doesn't mean it can't happen again. And I'm not trying to like do a bond scare or anything. I'm just saying it's something to look at. It's something that I think is important. And I think, regardless of what happens, I do agree with Andre. Like, this is another great chart that you can see previously. We've hit these. This is called the distressed inflow pressure index. You can see previously for bear market bottoms, it kind of creeps up on you. I don't think we'll have a sort of 2018 style event anymore, but we started getting flashes of this. And, again, I kind of side with Andre here in the fact that we're probably, given the AI trade or the rotation or whatever you want to call it, commodities with metals and obviously all the energy, the chips, the RAM stuff, the AI stocks themselves. You had SpaceX, launch recently in terms of their stock. Bitcoin was kind of not sexy anymore, where 4 years ago it was kind of your only high beta, quote unquote, option outside of all the SPACs and everything else, if you remember that whole era. But I think there's going to be sort of a silent rotation again, maybe not so silent, but I do agree with Andre that people aren't putting enough emphasis. And I had this chart up earlier, but it's not even worth pulling up. But retail investor volume and Google trend search for Bitcoin specifically is just in the gutter. And that's exactly when you want to be accumulating, especially if your outlook is 2, 3, 4 years out.
It is. You want to be here when it's boring, because that's when you get the best deals and you set yourself up for the future quite well. And if you are buying Bitcoin, we got to give a shout out to our friends over at Rhino Bitcoin, because before Getting access to Bitcoin financial services was slow, clunky, and scattered across all these different platforms, each with its own limitations. But Rhino right now is changing that. Rhino is a next generation Bitcoin banking app designed to handle all of your Bitcoin needs in one place. With Rhino, of course, you buy Bitcoin with zero fees, get more sats for every dollar that you spend, make payments over the Lightning Network instantly and with near zero fees over there. Send cash globally over Bitcoin rails, fast and easy to friends and family around the world, and set up automatic savings DCA so you stack sats on your schedule and build wealth over time. This is just the beginning. Soon you'll be able to pay bills, direct deposit, even save for retirement, all seamlessly inside the app. And they just added a new loan section with a partnership with Arch. So if you want to borrow against your Bitcoin, you can do it right in Rhino itself. And of course, Rhino protects you with biometric verification, 24/7 fraud protection, and the confidence of knowing your Bitcoin is never rehypothecated. Go today to rhinobitcoin.com. Just tap the link below in the description and sign up with the code Bitcoin News. And Rhino will give you $21 of free Bitcoin when you deposit your first 100. So start your stacking journey now. There's never really been a better time. You've seen it right now in these charts. Rhino is a great place to do it. If you have any questions, feel free to send them a DM over on X. They're a great team. They answer all the DMs, and we are very close with them. Thank you to Rhino. Again, that is rhinobitcoin.com. All right, gentlemen, we are coming towards the final quarter of this show. There's still many things I want to touch upon. But first, I want to get the opinion on Michael Saylor and strategy. So it's been over a month since they've announced a buy. They have been selling a lot of MSTR common shares, but what are they doing with that? They're buying dollars and they're keeping them in their USD reserve, now over $3 billion to pay the dividends on STRC. I mean, I guess I'll take your charts down and just add up this STRC chart right now. I mean, we had the DPEG, the crash down to around $70 back in late June, and it has recovered back to the high 80s ever since they started accumulating all this cash for their dividend payments. But we still haven't seen it creep back up to 100. I want Andre's opinion on this. Do you think there's a conflict of interest within the company between buying Bitcoin, respecting common MSTR shareholders, and making sure that this new product, STRC, goes back to 100?
I mean, there's always some kind of conflict among like bondholders, creditors, and like equity holders, right? And across the whole capital structure, right? And I think from a capital structure point of view, because preferreds are more senior to common equity, it makes sense, right? To dilute common in favor of preferreds. It does make sense because, yeah, I mean, the preferreds are first in line in a case of bankruptcy anyway, right? So common shareholders, they won't get anything if MSCR does go bankrupt. But I think in general, like both, especially bankruptcy risk is essentially non-existent because the asset stack is so much bigger than the liabilities still, probably like 3 to 4 times bigger still. So for MSCR to face bankruptcy, I think Bitcoin had to drop another 60% from here, which is very unlikely. And so I think in terms of liquidity risk, this has been averted by Saylor, and I think it was like a smart move and also bold move to first not only increase this kind of dollar liquidity, but also I think what was super important for this kind of STRC recovery was this pledge that he did, that he said like, first we'll keep at least 12 months of dividend coverage, right? And we are even willing to sell Bitcoins to keep this kind of liquidity coverage, right? And I think this actually eased a lot of concerns about liquidity risks. And so I think that's when he put a bottom into STRC and the preferred stock complex. And I'm actually quite optimistic. I don't think he needs to get STRC to par, but it looks like they want to get it back to par. But I mean, from a pure kind of fixed income bond math perspective, there's no particular reason why STRC should trade at par at all times, right? It depends on so many factors, right? Especially on like the prevailing level of interest rate, Fed policy, right, and so on. So, and since the US Treasury 10-year yield has been moving higher, right? I think the required yield for a stretch creditors has also gone up, right? And so I think he can do two things. So he can, of course, increase the dividend yield, right, to like pull stretch back to par, or he can buy stretch. What he's actually doing, right? He's been buying stretch back to bring it back to par, and I do think it's a smart move because he essentially got 100% when he financed his Bitcoin purchases, and now he buys back below par, so he's doing like a book profit. Yeah, let's see. I think he can still restart his credit engine, digital credit engine, without stretch reaching par again, right? Because I think it will be too much of an effort to raise the dividend and so on, right? In terms of interest expenses, but yeah, let's see. But I'm actually quite optimistic.
And Durden, what's your take on MSTR and Sailor World?
I'll try to be nice. I'm in a good mood today, but
you don't have to be. You don't have to be.
I just, well, he can always ask ChatGPT what to do next, and that might help him out. But on a serious note, their Bitcoin price per share has continued to tank since the June 1st stuff, and that was one of their like main value props back earlier this year. So, the convertible debt that they still have to convert, like whatever, they'll figure that out. But they're just going to continue diluting common shareholders, in my opinion. I think, the fact that we've seen them sell some Bitcoin so far is just going to increase in terms of having larger, more frequent sales. And then that unfortunate part is that it'll probably bring the price down again. It did the opposite earlier, obviously, right, where we had a nice little bounce. But I don't like market concentration, right? Like I just, at a general, like if I really zoom out and look at what Sailor's doing, I get it, but I don't think it's good holistically for Bitcoin. And if you really want to go like crypto anarchist capital type stuff, the original ethos of Bitcoin, right? What's the first thing that's embedded into the blockchain was the global financial crisis, the bank bailouts, all this other stuff. And it was just really funny to me to see last year, the cycle with the ETFs and everything, people celebrating that whole notion. Like, yeah, the bankers are going to buy all our coins, make us all rich. It's just, it sort of collides with the whole ethos behind Bitcoin, where it's at the end of the day was supposedly supposed to be for people to custody their own money, to not be tied to banks, to not have to deal with KYC, right? If you got debanked in some country or you didn't have access, you can use Bitcoin. All that stuff is still true. It's just the risk of sort of high allocations of Bitcoin to one entity, right? Like what if something, God forbid, happens to Sailor, right? It's the same thing that people ask about with Berkshire Hathaway, right? Obviously they have a plan in place and everything else like that, but it just doesn't sit right with me. And that's, I'll leave it at that. But they pumped the price up, so it was good while it happened.
I actually disagree with this kind of view a bit, because if you think about, I think grain of salt on Twitter, he made a good post. Like, did the Bitcoin maxis convince 170,000 people in 2026 to buy one single Bitcoin? They didn't, right? It was Sailor who bought like 170,000 Bitcoin this year, right? And it's not only MSTR; it's behind the company MSTR, you have millions of shareholders, right? And at the end of the day, it's just an on-ramp to increase adoption, right? To widen adoption. And I don't think we get mass, because we want mass adoption of Bitcoin, right? We want to reach hyper Bitcoinization. And I think this kind of institutionalization, financialization, essentially this kind of Trojan horse capture of the like traditional financial system is just part of the whole journey, right? And you don't get mass adoption by sitting in your basement and hoping like banks adopt Bitcoin, right, and custody Bitcoin for no reason, right? Of course, they want to profit, and that's probably one of the key economic incentives why Bitcoin works in the first place, because of incentives. And so I think what Sailor is doing in general, but also the ETFs, is it's this kind of Jess Myers thesis. It's they're trying to facilitate this kind of capital flow from the traditional financial system, right, into Bitcoin, right? We still have this huge pile of capital that's sitting on one side of the equation, while Bitcoin's still just like a $1 trillion asset, right? We have like hundreds of trillions of dollars on one side and $1 trillion asset. And that capital needs to fall into Bitcoin, right? For it to become like a global reserve asset to reach this kind of mass adoption. And therefore, I think strategy, the phenomenon of strategy is a good thing, right? Because it's just facilitating this kind of transfer of capital.
Those are great points. Really quick, Rob. Sorry, I'll just say I totally agree with that, and those are great points. The optics and the mass adoption and everything like that, legitimizing the asset class is 100%. I agree with. I just, the whole like having one guy at the helm of this big thing. If it was more spread out, I think I would feel probably better about it. And there were some, obviously, other companies doing it. A lot of them for bad reasons. There was a point where like if you were adding Bitcoin to your balance sheet as a treasury, you'd get a nice little stock pop. But I do agree that in general, it's a really good thing. So you're definitely a glass half full type of guy, Andre, I think, and I'm definitely a glass half empty. So it's been those are great points, though. I'm totally in sync.
I mean, there are always like risk of nationalization and all that stuff, of course. I mean, but I think the beauty about Bitcoin is like, even let's say strategy controlled, like not 4% of the supply, but let's say 40%, which is probably a nightmare for many Bitcoins. But let's say it controls 40%, but he can't change the protocol, right? Unlike proof of stake, with proof of work, you can't really change the protocol rules. Bitcoin stays the same whether you own like 5% of the supply or 50% of the supply, right? I think that's the key point and beauty of Bitcoin.
Yeah, that's true. And we didn't even talk about the there was a whole narrative about the US like using it as a stockpile reserve asset, right? Or something last year. Like that kind of died along with everything else. But yeah, sorry, Rob, go ahead.
Yeah, I think both of you are right. I mean, Bitcoin is not going to be the next neutral world reserve currency without the financialization aspect, banks adopting it, countries adopting it to get to that $30 trillion market cap to match gold or outpace it. You need all these different players to come on board. And it's an open permissionless protocol. So anybody can go out and adopt Bitcoin and put it on their balance sheet. But I also do think that the big point is that we can't lose focus of the mission here. And the beautiful thing about Bitcoin is that you can take self-custody. You can be in charge of your own money, be your own bank. And the emphasis on self-custody has definitely been slept on over the last year or two as the treasury company craze peaked and has now fizzled out. We still don't see as much self-custody come back. And I think that really does come out during times of crisis, to be honest. I mean, when enough people are pissed off at the government, are worried about what is going on when it comes to money printing, or as we saw the trucker protest up in Canada, that's what gets people interested in taking control of their own money, wanting it outside of the system. And Bitcoin hasn't changed, right? All those fundamentals are still there. You can still take self-custody of your Bitcoin by just memorizing 12 words and crossing a border. So Bitcoin's fundamental properties are still there. They haven't changed, and they'll be ready when the world needs it. And hopefully, I mean, our goal here at Bitcoin News is to make sure that people still know that they should be self-custodying their Bitcoin, taking control of it, and making sure that no third party is able to separate them and their Bitcoin. There's definitely space in your portfolio for different plays if you have the excess capital and want to get creative or try different things. But everybody, we believe, should have a self-custody stack that is there for them when they need it most. All right, gentlemen, before we part, let's get some predictions. I'll go back and forth so that one of you starts and then before the other. Okay, today, Fed decision. Cut, stay the same, or hike? Let's go, Andre, first.
Stay the same, but I think there's slightly higher chance for a hike, to be honest.
All right, Durden, what do you say?
Yeah.
I think they're going to keep rates the same, just given some of the job weakness and some of the other stuff that they probably look at and regarding their mandates. So if I had to pick, I would say they're going to keep rates the same.
Okay, let's look over at the NASDAQ. Will we end the year in a bear market? Yes or no?
Yes. Yes, because I think we mentioned this at the very beginning, right? It will take time for this whole semiconductor capex cycle, over investment cycle to be digested, right? And these things usually take multiple years. So I think we're just starting to enter this kind of bear market. I don't think we'll do a V-shaped in the Nasdaq or semiconductor complex anytime soon. Probably we do some kind of decade bounce, right? But I think we're in the bear market right now.
And what do you think, Durden?
Yeah, I don't want to doomer, it up at the last 5 minutes or whatever, but people forget their history. I just finished reading Markets Never Forget, but People Do. Great book if you're interested in, stocks specifically. But a secular bear market, if this AI capex thing blows up, is not out of the question. And I generally am just bullish by design, as far as I'm glass half empty sometimes. Stocks generally drift up and to the right because of flows and, monetary expansion and whatever, but it wouldn't be out of, I don't think we're out of the woods yet. So if I had to go and make a decision at this point, I would probably agree with Andre and say, V reversals, they do happen and they do happen often. I think people are going to be surprised.
I have to say, for the record, I'm usually permabull. It's very rare to see me as a bearish guy.
All right. And then finally, no one's going to hold you to it, but price prediction for January 1st, 2027, Bitcoin. Where are we? Let's go Durden first.
This is a good one. January 1st, 2027. So that gives us 5 months or so?
Yeah.
I would say we're probably 90 to 95K if I'm being bullish.
I would take that.
Yeah, I think that's quite reasonable. I think 12 months from now, I think we'll reach new all-time highs, because most of this kind of downside will probably resolve into upside, meaning more financial pain will lead to some kind of pivot by the Fed, probably the US government and other governments around the world, right? Probably Korean government, let's see, right? And so I think we'll be higher than 126K 12 months from now. But I think over the next 6 months or so, I think we'll probably retrace back to the ETF cost basis, which is more like kind of equilibrium price in my view, is slightly above 80K, I think.
All right. We'll hold you to it. Yeah. I mean, if we end this year in the high 80s, 90s, I'd be all right. I'd be all right with that. So let's see. Let's see how it all goes. All right. Where should people go if they want to find out more about your work? Andre, first.
So I'm on Twitter. You find me at André_Dragosch, also on LinkedIn. I've also published a book called Exponential Gold, which is an institutional investor's guide for Bitcoin. You can find it on Amazon or on exponential-gold.com.
Nice. And Durden.
Yeah, that's awesome. Congrats on publishing the book. I'm going to have to get
Thank
a
you.
copy of that. You can find me the same place on Twitter, DurdenBTC, or also on DurdenBTC.com. That has all my systems, all the free charts that I shared. That's all on there for free, and anybody can go check it out and use it. And thanks for having me on. This was a lot of fun. I hope we do it again.
Yeah, absolutely. Thank you guys for coming on. Everybody, if you've been watching, hit that like button, repost this on X, subscribe if you're on YouTube. We are live every single Wednesday, 11 a.m. Eastern. Great guests like these two, some awesome charts you'll only see live on this show. It's been a lot of fun having you guys. I look forward to having you both on again. Let's do it at the end of the year. Let's see if these price predictions are all right.
Yeah, let's do it.